There are two types of bookkeeping system, the single entry method and the double entry method. Okay, so the single entry bookkeeping has one entry per transaction, while double entry bookkeeping has two entries for or per transaction, a debit and a credit. The debit is recorded in one account while the credit is recorded in another. On the other hand, single entry bookkeeping only uses one account per transaction. Okay, so sa single entry, parang simpleng naglilista ka lang ng mga pumapasok at lumalabas na pera. Samantala, sa double entry system, kung nagpunan ka ng debit, kailangan mo ring magpunan or lagyan ng kaparehong halaga doon sa credit side for the appropriate account para kapag nag-check ka later on at gagawa ka ng financial statements, tugma, tumpak at balanse. So which one is better? Of course, the double entry bookkeeping is the most widely accepted and used system in the world. There are two major books that are being used for a double entry system, the General Journal and the General Ledger. The General Journal is also called as the Book of Original Entry. It is the first place where data is recorded, and it contains the date, the transaction details, the folio or reference number, as well as the debit and credit columns. The General Ledger is also called as the Book of Final Entry, where data is posted from journals and from sub-ledgers such as accounts payable, accounts receivables, cash, fixed assets, expenses, and others. So this is the format of a General Ledger. It contains the account name, account number, the date where transaction has transpired, the item, the folio or the reference number, as well as the debit and the credit column, and the balance. And it is also simplified into so-called T accounts. Okay, so T accounts to maintain or to check the balances of these credit and debit. So these are the two major book of accounts, the General Journal and the General Ledger. So what are the rules of debit and credit? We debit whatever is received, be it cash or non-cash items. So tinatawag din natin na value received. And for credit, we credit whatever is given out, or it is also called the value parted. Kagaya ng present natin kanina, those money or valuables coming in to the business, we record in debit. And those money or valuables that is given out, we record in credit side. Okay, take a look at this. For an asset received, there is increase in debit and decrease in credit. For liability account, it decreases in debit and increases in credit. For revenue, it decreases in debit and increases in credit. For expenses, it increases in debit and decreases in credit. And for equity or capital, it decreases in debit and increases in credit. So those are the rules of the debit and credit. Just like in all other mathematical equation, we also have a standard equation being used in accounting, the accounting equation, where assets is equal to the liabilities plus equity. Just like in a weighing scale, okay? So when you put 200 grams to the left arm, you also put 200 grams to the right arm. If you add 500 grams to the left, you also add 500 grams to the right. Then if you take 500 grams from the left, you also take the other 500 grams from the right to keep it in balance. Yan ang equation. The debit is always equal to credit. And this is the bookkeeping process. We record all the financial transactions in the general journal, either they be cash, cash receipts, purchases, or sales. and then we segregate these accounts in a general ledger before finally creating financial statements such as profit and loss and the balance sheet.